Good morning, sir. We wish you a very happy new year. So, welcome to the new segment that we have started to know your views about the market. Can I head to the first question?
Yeah. Thank you very much, and happy New Year to all our employees, clients, and well-wishers, and wishing you a very successful 2022.
Thank you, sir. So, moving to the question, we have entered a new year. So, what, according to you, are the factors that can affect market this year?
So normally, when you assess markets, markets always drive with economic factors, macroeconomic factors. And normally we all say that normally we track 4 or 5 important factors on macroeconomic dimensions. Primarily, it is liquidity. As of now, liquidity looks pretty okay. And in Indian context, liquidity means there are 3 participants in Indian context. One is foreign institutional investors, domestic institutional investors, and retail participants. As of now, it looks pretty okay. Everyone is buoyant about India because of the India growth story. The GDP growth looks pretty good. The forecast is at around 9-10%. So the second factor is definitely the growth. And third one is inflation, which is linked with interest rates. If you have, I think even now our inflation is not out of control, so interest rates are still within the limits. So I think in that factor also looks fine. Then the fourth factor is how our government finances are looking at, like balance of payments, fiscal deficit, trade deficits, all those parameters. Those are also looking pretty okay because government has been managing pretty good in our finances. So all these are the macroeconomic factors normally we track in capital markets, both in equity and debt. Coming to 2022, all these factors looks pretty decent. There are 3 other factors, especially looking at if you once when we enter into 2022, we have 3 other out of these macroeconomic factors which may affect the markets. They are, one is, we all know COVID. The COVID situations are very fluid. As of now, the Omicron wave is going on. Even the cases are going up. The intensity is not so big. But anyway, it is an evolving situation. So COVID is another factor which we don't know. Second thing is geopolitical tensions, which we are not factoring too much right now. Normally, geopolitical tensions can always affect the markets. Like, for example, any rise in tensions between China and Taiwan or Russia and Ukraine can affect the markets. As of now, the probability is very less. We are assigning only 5%, 10% probability for anything worse to happen on that side. And at the same time, the third factor we are looking at very closely, we are watching very closely, will be the Indian state elections. 5 states are going for elections, and the dates are already declared. Feb, March is the election period. And UP and Punjab will be the 2 states which we are closely watching. The markets will be closely watching the results of these 2 elections. I think these are the factors how when we enter into 2022. Overall, I will say in one word, we are cautiously optimistic.